Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check that out today. You'll also find links to our Patreon services where we offer a lot more in Discord for our Patreon members, and of course a link to the new Cheeky podcast as well, so why not check those out if that is your bag. Okay guys, let's waste no more time though. Let's jump right down into this. Right here we have Bitcoin paired up with USDT. We're on the hourly chart and Binance is the data source. Now here we can see that obviously after the video we did yesterday, we were expecting a bounce up towards 21,061 through to about 21,557. However, that was based on the price actually not being as low as it was, right? This is based on this low point of about 19,237, and we actually dropped down to 18,624. So obviously our targets need to be adjusted as well. So if I grab hold of this fib, in fact, actually, what I'll do is I'll just delete that one. I'm going to just take a fib from this high point here down to our low point, and I'm going to just expand this down to the 50% and then the 88.2%. Okay, so a wave 2 typically can land anywhere between a 50% retracement and an 88% retracement. Okay, and it's an 88.2 to be more specific. So it's 21,475 on the higher side of the spectrum, and on the lower side it's 20,191. So it's actually a tad higher, 91. I'm not going to be able to get it. I'll just type it in here, 91. So I'm just going to type that in there, like so. Okay, so we know that we're in this realm, and you can see here that we did bounce up, and we actually finished right about here on the 702, just a little bit above that 702 retracement zone, about 20,860. We actually wicked up to 20,918. Okay, so yeah, as you can. 20,916. So essentially, yeah, we've got that. However, the other thing I want to kind of say here is that inside this wave 2, I would kind of expect a 3-wave bounce. Now it's possible that we do have 3 waves in here. So if I zoom in, let me just grab this for a sec, zoom in on this little moment here. If I grab a WXY, we can see that we kind of have this little kind of mini bounce right here, then we push up. I mean, you could argue that that is done, and we're looking for confirmation that the bounce is over will come in by dropping down lower than 18,226. Okay, so that's that low point. Okay, let me remove that one, we don't need that. Okay, so that's an interesting kind of thing just to know. Okay, or alternatively, we actually still have this 3-wave bounce and we go up with an A wave, W wave here. We're pulling back down right now, might be a little bit lower, and then we push up again into this yellow box, and basically we might end up with a double top. We might go a little bit higher, all of those kind of things there. But essentially, we could see a 3-wave structural bounce where we just move right back up into this area. Now, the reason for this, if we take a look at the stochastic, you can see here that we are lowering our hourly stochastic, and we're almost overbought on the 4-hourly, right? So this one little bounce, it can tell you the sentiment of this entire space. Essentially, the momentum behind that price is not there, right? Which allows this stochastic RSI to move fast. Okay, ideally you would have wanted a slow moving stochastic RSI, because that indicates there's a lot of momentum behind the price. But when there isn't momentum, we've head right back up to this overbought area within 1 candle, or 2 candles. So very, very bad really for crypto. However, the 8-hour is still down here, so this could see us with that little surge upwards. That again, takes our 8-hour stochastic RSI up into the overbought area, and then again, everything is lining up nicely for that next descent down. Okay, so can't rule it out yet, but if we do drop down lower than 18,626, I would say there's an incredible or a high probability that we are done here. Okay, obviously you can have expanding flat corrections and things like that that do go down lower, but they're rare. You wouldn't necessarily expect to see those, so we can watch that. But I think for the most part, I would say that if we did drop down lower than 18,626, I would say that, yeah, we're pretty much done with wave 2, and we're now coming into wave 3. Okay, because essentially what we have going on here, if I actually pull that 5th wave down here and that 5th wave down here, we had a 5-wave structure inside wave 5 of a 5-wave structure. That 5-wave structure is inside a wave 1 structure. Okay, so on a macro scale, what we've actually got, let me remove these fibs, we don't need those. We have a 5-wave drop, which is a wave 1, and inside that 5th wave there were 5 waves, and inside those you could see that there are potentially, you know, 5 waves within wave 3, for example. So you can kind of keep drilling down and drilling down and drilling down. Essentially it gets kind of pointless when you're already on the hourly chart and you're already drawing these up. So do understand that, you know, we could be now finishing or have finished our 2nd wave on a macro scale, of which, guys, is of course a part of a macro 5th wave, and we've got a 5-wave drop, right? So that is wave 2. Okay, and all of this is wave 1, then our lows of 15,422 to 16,743 are too high. The price needs to go lower than that. So based on this momentum, okay, the momentum to the downside that we've had after our zigzag pattern, after that really long, boring sideways trade, nothingness happening, essentially, you know, what we've kind of got here, if I drag this over to that current high, that if this is our wave 2 high, our wave 3, I would expect to come down to 16,114. Okay, so let me just mark that right there, and I'm going to just change the price. I'm just going to delete that and put 14 on there. So this little area just here, this little yellow line, okay, that's where I would expect wave 3, which means we would have a wave 4 bounce, and then a wave 5 that might come down lower. Okay, now on that, a wave 4 here, if I take this low point, okay, and I take our wave 3 high point, which would be about here, we would expect wave 4 to potentially bounce up to this area. Again, this is all kind of speculation because we don't know where the exact numbers or where these things are landing just yet, but it kind of gives you an idea, right? We would look at maybe a move down here to 16,114, a bounce up to about 17,800, and then if that is our bounce for wave 4, then we can predict that wave 5 would be somewhere down here. I grab hold of a little rectangle, and I'll just create this little overlap just down here. Okay, and essentially this would put us somewhere between 15,137 and 15,728. Okay, so I'll just mark these up as well so we can keep a good eye on them. Let me just grab this, just pull that there, and then we'll just grab this one at the upper end as well. Okay, and then we'll just mark that up, which was what, 728. Okay, so 728. Okay, so what have I done here, guys? Let me just remove this fib, and I'll remove this fib. Okay, so when it comes to Elliott wave theory, there are some specific Fibonacci retracement areas that are typical with certain wave counts. Okay, so wave 1 is usually you know, a 5-wave structure or a diagonal structure or something to that effect. It's usually the weakest one out of all of them. A wave 2 is normally one of the deeper retracements, okay, because basically people are not convinced that wave 1 is a trend setter, okay, and therefore they can counter that, which is normally why you see an 88% retracement, like typically somewhere between 50 and 88, right, because people don't believe that actually the trend is now forming in the opposite direction to what it was going in. So wave 2 tends to catch a lot of people out. A wave 3 typically would be 1.618 or greater. Okay, now there are some instances where you can see wave 3 being lower than 1.618. However, I like to think of those no more than diagonals rather than actually impulsive trend setting structures. So for me personally, I always look for 1.618. 1.618 is of wave 1, right? So you measure wave 1, you put that to the top of wave 2. 1.618 down is where I would expect wave 3 to go. It can, of course, exceed this, but this is kind of where I would expect it to go. Okay, then wave 4 is usually a 38.2% retracement of wave 3. Okay, people are not really necessarily wanting to buy into this one because, again, it's counter to it, but traders will happily trade from it and profits will be taken or whatever, right? And the price will bounce in the opposite direction for a very short period of time. Normally, though, if wave 2 is simple, wave 4 will be complex. If wave 2 is complex, wave 4 will be simple. They normally are opposite each other in terms of the structures that you tend to see. Okay, so bear that in mind. Not a hard and fast rule, but something you tend to experience when it comes to Elliott wave theory. Then, of course, wave 5 is somewhere between 1.236 and 1.618, which is why we have the ranged at the bottom here. Of wave 4. Okay, so the higher wave 4 goes, the lower that wave 5 goes. Okay, the shallower our wave 4 goes, so i.e. doesn't go as high, then the higher price expectation we'd have for our wave 5. Okay, so they all relate to each other. It's very important that if wave 3 changes, wave 4 will change. If wave 4 changes, wave 5 changes. So this is why you see me fluctuate a little bit and I change some of these targets around. It's not because, that something doesn't align. It's because you have to apply the Fibonacci numbers to the wave counts to make sure that everything is making sense and that you can kind of, change your strategy according to what the data is presenting. But here's something else that you may not know. And that is that I'm not a financial advisor. I cannot give you financial advice. What I can do, however, is give you my thoughts and opinions on the data inside the charts as I see it. You definitely don't want to be trading or buying or selling on anything I say or do here. You should do your own research. You should come to your own conclusions and you should make your own financial decisions. I'm just giving you my thoughts and opinions on the data as I see it. You can do with that as you please. Okay, let's move on a little bit. Okay, let's jump up into our daily chart here. Okay, so we are, of course, taking a look at a pretty significant pullback down. Now, one of the things I was talking about a little while ago, and a fair few months ago, was the possibility for an expanding flat correction. Now, an expanding flat correction was something that I actually had ruled out at around about here. However, it is now possible that we can basically say that, yeah, sure, it's an expanding flat correction. Possibly. Okay, and I say possibly, and it's because of the structure of what you would expect to find inside an expanding flat. Okay, so we come down here, you can see so far we haven't really pulled back down in any significant way, not past that 1.618. Doesn't necessarily mean that it's not an expanding flat. An expanding flat has to end with 5-wave structure. But looking at it, yeah, I'm still not 100% convinced that that is exactly what is going on. We have come down very deeply here, a little bit too much. Essentially, I was looking at this being an expanding flat as a 335 structure, because this high point just here is still higher than our wave 1, which means wave 4 is not being invalidated. Okay, and it still could be possible that actually we have this more bullish scenario, right? We've got to bear in mind that Elliott wave theory doesn't care about time. Okay, it doesn't care about Bitcoin cycles. It doesn't care about anything like that. And it, for the most part, considering this little bearish moment in time and this little bearish moment in time, actually you could consider that the next run up could be pretty significant, but we're just finishing a wave 5, right? Because all of this did start way back in January of 2019, right? There's so many different ways of looking at it. Like, in theory, this impulsive structure is still standing. There is no reason to think that it hasn't already kind of or it isn't already kind of, continuing. It has no reason why it wouldn't continue to the upside. Alternatively, of course, you do have that really rare option, and it is rare because it is unusual, okay? And that is that you would have our 5th wave just here, like this. And it's unusual because it can happen, but it's just so rare. You just don't ever see this. You don't see a 5th wave going above the wave 3 just barely and then dropping down. So it's an option. It's out there. It's a possible scenario, and I'll leave it like this for now on the macro scale. But I do think it'll be a little bit clearer whether or not we drop down lower than 13,970, which would void any potential future fifth wave up, and actually we start a whole new structure to the upside, which I think at this point in time, I think most people would actually prefer. They would prefer to see a whole new structure emerge to the upside, as ultimately that potentially gives us more potential gains, right? If we were just taking a look at this as a next kind of fifth wave dropping down. So let's actually take those $15,500 approximately. It does put our target somewhere up there about $165,000 or $170,000. Actually, it's anywhere really between $98,000 and $170,000. So, you know, for the most part, you could see a fifth wave being up there. However, a new structure might take it significantly higher, right? If we have another really good run, for example, you could be talking about, you know, 300k or so. But yeah, it's really hard to know until you see that structure, what actually starts forming out, and all of those kind of really good things. But for now, yeah, I think we're getting close to the very bottom here. And you know, we are talking about moving down into the third wave of a fifth wave of a fifth wave. And you know, all of that does indicate a big, massive surge to the upside. What's not necessarily seen just yet is whether or not we actually move up past the origin of the correction, i.e. we are going to move up higher than this area here, or even the $69,000, right? Because it could be that actually we just have a wave two and we have this really deep correction. I don't think that's the case, right? And when I say deep, I mean you're talking about dropping down to values that haven't been seen for probably, like, you know, way earlier than 2017, like 2016, like $600 Bitcoin, for example, right? Those are the kind of lows that you would be talking about under those kind of structural moves. So I don't think that's really likely to happen, but something to keep an eye on and keep our minds open to all the various different possibilities and let the data tell us what is going to happen, rather than making our own opinions and forming our own conclusions based on what other people are necessarily saying in the space. Follow the numbers, follow the money, follow the data, and then let that decide for you. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.